Welcome back to the Owner Seat, the show where operators, founders, and franchise leaders learn how to build businesses that don't break under pressure. Today's guest is the guy I want in the room when the dashboard says green, but the business feels red. Bill Dillmeyer is a CFO and operating partner who's helped VC, PE-backed companies build fundable, scalable, exit-ready businesses by fixing the stuff most teams ignore: financial infrastructure, operating cadence, and go-to-market alignment. He's supported teams from early stage through Series A through C and beyond, helping raise capital, improve forecast accuracy, tighten sales economics, and turn board reporting into something leaders actually trust and look at. I love that. Bill has a very clear point of view. Better forecasting doesn't fix broken financial plumbing. Before insight comes infrastructure. So in this episode, what we'll chat about is why more dashboards often makes leadership less confident, what it really means to build financial infrastructure that holds at speed and as you grow, how to tell if your pipeline is lying to you and what it's costing you, capital allocation in the intelligence area, when can we afford it becomes the wrong question, and the operating cadence that keeps teams honest when things get busy and noisy. We're going to jump right into it. Bill, so excited. Welcome to the Owner Seat podcast, sir.
Good afternoon, Albert. I am so excited to join you and just the energy in the room. I know it's going to be a great series of conversations. And honestly, I hope we can get through all 25 questions because I feel like we're going to start to go deep on some of these. And no, that intro was spot on. I've been able to be super fortunate to have been in a lot of great situations. I've seen a lot, and every day is just a new opportunity to learn from those and put those experiences to work.
For sure. Yes, we do have a lot of questions to go over. I am so excited. Feel so lucky that I get to have you here on the show. You know, a lot of our audience, whether they be from the finance or AI side, and even more so from the fitness and wellness space, business owners, franchisees, franchisors, they really do need some support and help around finance education. I've been following you. I honestly see you as my virtual mentor from the finance angle. I've been learning a ton. And one of the things that I've noticed that you chat a lot about as people get really excited about maybe some of the sexy things around strategic finance, where you go and where you play a lot of and what you promote a lot of is you've said accounting is the bones of the business and you don't pivot from there. When did you learn that the hard way, that accounting, as much as people want to spend time in strategy, accounting is the bones, it's the fundamentals?
Gosh, I think that goes back to just some of like my earliest experiences. Like I'll say that I was still in high school and I have no idea to this date how I got this job, but I was actually the assistant to the director of budgeting and planning for an international
Wow.
plastics
In high
company
school.
in high school.
That's
Oh yeah.
excellent.
And for me, it was coming in and looking at the manufacturing process. They actually make those little white creamers that you get when you're at your favorite convenience store.
Wow.
And for me, it was very tangible. And it was like, no, you don't calculate this number right. Like you're going to throw off the production, you're going to throw off the manufacturing team. So getting those base fundamentals right was just so crucial to be able to understand how you could go ahead and drive the right outcomes. Like, you only have 3 production lines. Are you going to overproduce, underproduce, and how do you optimize on a go forward?
That's so good. And I mean, in high school, learning about job costing and raw material and all of the ingredients, cost of goods sold. I mean, what great experience just leading up to now everything that you accomplished. So cool. The other thing that you like chatting about, which I hear this all the time, Albert, we need more dashboards. We need more forecasts. But then you lift up the hood and like, wait a second here. We're asking for the fun and shiny things, but the infrastructure, the back office is completely off. And you've actually on your YouTube channel, right, on your LinkedIn lives, you talk a lot about some of the patterns that you see as founders are looking for more and they're asking for more forecasting, but what they really need is some tightening around finance infrastructure. Can you share a little bit about what you've learned and experienced throughout the
Sure.
process?
And you're right, like, just because you can build a dashboard doesn't mean you need the dashboard. I mean, you can, for me, it's about surface area and making sure that you understand the right amount of surface area that are the key drivers to your business. And so for me, like infrastructure starts with having good hygiene on getting your books done. I'll
Mm,
tell you, I am not a CPA by training. I can get through most accounting stuff, but when it comes to that hyper technical stuff, I always have a sharp controller
mhm.
next to me.
Yeah.
After I know that the books are good and I understand where the opportunities are from a lever perspective, that's really where you come in and start to build what a good financial engine looks like.
Right.
And from there, it's about understanding really, for me, I start with sales. Like, even as a
Oh,
finance person, I want to be on the front line with sales. Actually, some of my favorite people to work with are sales leaders
yeah.
because every deal is the next deal. Every deal is $1 million. And that's where understanding that revenue engine and being ready to kind of poke at it is so, so important because
Yeah.
that, after you get the cash flow right, you can then figure out what's investable,
Mm.
what's fundable, and what do I have to do to keep the lights on before I have to make some hard changes to the organization.
A lot of people in finance don't get that close to the ground truth. I love that you do that and you have experience on, spending time with sales, right? And other departments, it might be the marketing team or being in the operations point of view, right? The
Mhm.
customer or member journey. So it's amazing that you do that. And I've been chatting with a lot of finance folk that reach out to me. It's like, what's one of the things that I can do best right now to continue to build my career? I'm like, go and understand the team member and customer journey.
Mhm.
Get in the field, get out there. Don't stick behind the models and the forecasting. You have to understand the business model. What are your sales team members dealing with? What is the
Mhm.
market saying? What is that customer feedback? And by the way, sales, I love it. I love all those gals and guys that are in sales because man, you really learn. I think my skin can be a little thicker because they know how to deal with rejection. They're
Oh, yeah.
outstanding. It's just a whole nother mentality. So that's
Yep.
so good. You work with a lot of startups and growing businesses. There's a lot of listeners out there that are in either a startup or maybe they're starting to grow or mature. When do you know from your experience, how do you know as you think about financial plumbing and layering in some of that level of
Mhm.
support, for instance, a CPA or a controller, or maybe you start to get into FP&A, or maybe it's time for a strategic finance executive or CFO. What have you learned? When is the best time to start accumulating some of that finance infrastructure and firepower?
No, that's such a great question because one of the things that I look at it when I'm doing any type of consulting, whether you're a young startup or all the way through Series A, I think it's never too early to start.
Mhm,
So if you were to sort of think about it in like a two-sided matrix, down the left-hand axis, those are like the core things that you have to do. And
mm,
across the top are the stages of the company. And you need to do them in varying degrees at all levels of the company. You just need to do it more or less as you continue to go down the road.
yeah,
So, for example, you're a young startup, maybe you're pre seed or thinking about seed, you're going to need a finance model. It doesn't need to be bulletproof. It needs to be, shall we say, directionally correct. It needs to be defensible, but it's not that level of rigor that you would need once you're closer to an A round or you're starting to scale rapidly. So, really, it's about putting the right level of attention on what's needed in the business at the right time. And your point about what finance folks in your community need from a mentorship perspective,
mhm.
I would say the best thing to look for is find out how to be a finance business partner to the
I love
leadership
that.
team.
Yeah.
For me, I had the opportunity to do that. And I will say I had 5 different bosses, head of sales, head of marketing, head of product. And your job, make the rounds, listen. First and
Mhm,
foremost, listen,
yeah,
and then resynthesize what that means into the model because you're not doing the company any good if you're sitting in the back waiting for data to come to you. You need to be in the fight and hearing what's going on in order to make an
100%.
effective difference.
100%. I love that. And you've had an opportunity, and I've seen you post about it, and I've been on some of your LinkedIn lives as you're talking about growing businesses. And, if you don't have that infrastructure in place or you're not proactive about what our systems and processes will be, it can get pretty chaotic very fast. And so I think about the close process or even reporting and forecasting, and if needed, dashboards, and now this introduction of, well, where do we layer in automation and AI? As you think about the sequence of all of that, where have you seen things be really successful as far as the systems and processes within
Mhm.
that cadence? And then what are some of the few where you're just like, "Oh, this is a recipe for disaster. We need to really clean this up."
Uh, I'm half laughing, half crying at that question because there's like a million different things running through my head of, well, it could be this and it could be that.
You're right.
I've so I'm going to give you an answer that could actually work on both sides of that coin,
Yeah.
and that is understanding sales pipeline and
Mhm,
sales pipeline management.
mhm.
So if the finance team and the sales team are not aligned in terms of what goes into the plan, what are the expectations? You're going to have this absolute mismatch where sales thinks that they only have to deliver X when in fact you need Y or X plus. And if your sales team isn't consistently tracking to those goals, you can get upside down in a hurry. So one of the things that I actually ran was, honestly, it was a shadow sales operations team. And
Wow.
we were in a situation where the head of sales kept saying how great the pipeline was. And he's like, oh, it's getting bigger. We're going to kill it.
They all
So
say that.
they all say that. But our founder messaged to our investors that we were doing really well,
Mhm.
but it just didn't come to fruition. And, one afternoon I had a few hours, and honestly, within 3 hours, I broke down the sales pipeline and realized that it was not as rosy as it seemed.
Mhm, mhm.
And we had to write down two-thirds of the pipeline, had to go back and retrench everything that we wanted to spend money on. So having that high degree of correlation and understanding what your sales team is delivering and being ready to look at a HubSpot or a Salesforce and just ask yourself some basic questions. Like, one of my favorite fields in Salesforce is days since open.
Hmm.
And you'll see, 200 days, 300 days, but they say it's going to close at the end of this month. You're like, hold on, what hasn't happened in the past 200 days that makes you believe that it's going to close this month? Like, that's where you just have to kind of poke
Mhm.
and you start to develop personas around salespeople. Like, one thing that I always say, around about the 25th of every month, you'll have what's called moving day, where they'll go into their um, CRM and they'll move the close date from January to February or February to March. And all you're doing is kicking that can. What you're doing at a very simple level is you're right shifting cash flow.
Right.
And if you look at it coming into Q1, every deal that you didn't close in Q4, you've effectively right shifted cash 36 months, if that's the average life of your customer, which is a pretty traditional assumption set that a lot of companies use. So you now can't invest in people, technology, new markets for that 36 months of cash that you thought you had. So being able to correlate those two is one of the make or break things that an organization has to be able to understand and have a very open and frank conversation.
This is
The-
so good
Mhm,
because, I chat a lot about cash flow on this show
mhm.
or even on LinkedIn. I post a lot about it because I do believe it is the DNA, it's the lifeblood. The cash runway is the lifeblood,
Yep.
especially, as you know, startups, growing businesses. I mean, it's a big must, right? All businesses. And tying that to your sales pipeline is crucial to, like you're saying. Where did that come from for you, Bill? Like, this, for instance, sales CRM, I can only imagine those listening, they just, it's a little intimidating going
Mhm.
through Salesforce or a HubSpot or a Pipe Drive. Where did this sales mentality come from? Or did you just, as the finance executive, identify this is so crucial to our cash runway? This is a must, and I have to learn it, and I have to deep dive and spend time with that team. Or is there some other experience that you had in sales and it just came maybe a little bit easier? Where did it come from?
Um, Honestly, I really have to thank my mentor for it. So I
Yeah.
was working for a company that Bill Gates owned It was a
Okay.
privately held company here in Seattle. And I was running finance, global treasury, had a really big swatch, had a team around the world. And one day, our CFO, who's been my mentor for a number of years, walked in. He's like, "You're feeling a little one dimensional." He's like, "Congratulations, you now own global sales operations and you have
That's
direct
awesome.
reports in Europe and Asia. So I need you to be able to go ahead and see what your numbers actually mean." So for me, I was thrust into running sales ops, building comp plans, breaking down pipelines on a global scale and understanding, how come the Asian market's different than the European market and what can
Uh,
I do to optimize revenue? But those are things that you just take with you. And if you think of yourself as an innate learner and you're in a startup and you're going to wear all those hats, it should be more of as much of a curiosity
mhm.
to be able to go ahead and figure out how can you drive the most amount of value within an org. And, that's where sometimes people get fixated on job title. And one thing that I always say is job title is probably the last thing that I index on. It's, am I driving value? Am I making a difference in the org every day? And how can I go ahead and just bring one more layer of information to the business to be able to make an informed, smart decision?
Yeah, that's so good. I appreciate you sharing that. A lot of the people that I chat with, and there's a lot of finance leaders that listen to this. Some of the feedback I get is, I'm really involved in this forecasting and this modeling. I'm really trying to improve the trust in the numbers, right? And we hear a lot of
Mm-hmm.
the single source of truth. Yet it sounds like for many finance leaders out there, it's just very difficult to get other leaders to trust in the financials are, foolproof. How would you
Hmm.
recommend? I don't know if that's a tech stack or is that, in meetings and how it's being presented. How do you strengthen the conviction, the trust in the financial infrastructure, especially when things are progressing? Like, how do you present that out? How would you recommend that?
For me, definitely start leading with the data
Hmm.
and show that your system is bulletproof. Like there's an expression that, we often use and kid about, but it's in God we trust, everybody else brings data. And if you have a difference of opinion on the data, let's peel it back. What is your source data? How are you going ahead and interpreting this? And at the end of the day, all roads lead through finance, whether
Hmm.
you're getting paid or paying someone. And it's really hard to not trust the data if that is your single source. Like if that is how you get paid, that's where the information comes from. And yes, a lot of it comes down to the quality of your tech stack. One of the things that you might be thinking about is like revenue recognition for subscription model. There are a lot of great add-ins. You can start using things like um, gosh, any one of the major GLs like Sage Intact or NetSuite.
Mm,
But if you're not going to go ahead and make that level of investment, there are some good intermediate tools. If not, you're going to have to brute force it with Excel. But being able to go ahead and make that data bulletproof is the most important thing. And that's the quickest way to start driving trust within the org.
right.
For me, there's nothing worse than a finance person who doesn't know their numbers.
Yeah,
Like it's honestly, it's embarrassing.
it is.
And
By the way, I've
that's,
been there. I've been there. It's a hard learning lesson earlier in my career.
Mhm.
Always be prepared. Know the
Yes.
know the financials, know the numbers because people will ask. It's bound to happen. Not just your boss. I mean, you're talking partners, peers, people you're
Mhm.
collaborating with. They want to know because we make decisions off of it. And I remember being frozen a couple times. I'm like, Albert, you got to dig in. You got to know this.
Yes. And that's the best way to build that degree of trust and be the authority. And,
Mm,
being able to look at the business from end to end. Like one of
right.
the things that I always encourage people to think about is if there's a slowdown in marketing, it's going to come back and bite you.
Mhm.
Be ready and prepared to talk about where it's going to bite you.
Right.
So, marketing slows down. That means your sales team doesn't have as many leads. Top line revenue starts to fall. Sure, you'll get some lift back on OpEx from a commission save, but again, you're pushing cash where else is this going to come back? Can I not hire? Are
Mhm.
bonuses at risk? So every month is honestly a recalibration of what you have, and don't think of yourself as a linear thinker, A to B, B to C. It's more like A to Q, back to C, down to P, because your business is going to keep moving. There's always going to be something that is under pressure.
Right.
And how do you go ahead and triage that?
Constant refinement. But I love that you do that. I love that you tie sales pipeline, as I mentioned earlier, to your capital allocation or cash runway.
Mhm.
Same with marketing. It's all
Right.
tying to what are we looking like from a cash positioning, not only today, but here in the future. Yeah, you're right. If there's a dip, well, we know that's coming. How are we planning for that from a cash balance perspective?
Mhm.
Right? Because those impact different decisions to your point, investing back in the organization or in equipment or in people or what have you. I love that. A lot of people will ask me, Albert, what are your metrics? Like, what are what should be on the KPI dash or the scoreboard? And, I
Mhm.
always say, well, it depends on the business. However, there might be, a few common ones. I mean, I was just curious what your thoughts were around that, like for the finance leaders out there, just for the
Mhm.
business owners that are listening as well. Have you
Yep.
found that there's dashboard pages, right? You can get deeper and more granular, but what are those? These are must. You just have to know these KPIs in order, to sustain success.
Number one has to be cash.
Hmm.
At the end of the day, the number in your bank account is the best judge of where you are. And from there, um, I start to look at things like retention
Hmm.
or
Yeah.
churn.
Yeah.
And am I growing? Am I losing? So am I gaining customers or am I losing customers?
Right.
Am I able to take a better price point for incremental
Hmm.
customers?
Hmm.
And as we all know, it's easier to sell to an existing customer than a new customer. So, one of the things that we like to look at is like NRR, so that net revenue retention. So, if you're in customer success, for example, the one thing that I will do is I'll reverse engineer how much you have as a quota in customer success for upsells and expansion
Oh, I
by
love
taking
that.
my churn. And you now need to go ahead and get me not only to cover my churn, but I need a bump to take some of the pressure off my sales team, which is why you see so many companies talking about like a 120 and a 130 NRR. And that's because your success team is continuing to be your best advocate.
Right.
And I'll tell you my quickest bar napkin metric that I do. And it's an exercise that I run all the time. Super simple. Take all of your customers and put them into three buckets: keep, grow, react.
Mm.
Your keep customers are your, highly penetrated customers. You know that they're not going to churn. You can actually give them a little bit of an upside. Your grow customers, this is where you can really go ahead and drive the business.
Mm.
So, maybe a small churn just to acknowledge things could happen, but that's really where your bulk is going to come from. Your react customers, these are customers that have either told you that they're going to churn or their usage numbers just aren't happening and it's not looking like they're going to continue to sustain. This is where you need to build a remediation plan. And so in this case, you've got little upside and a lot of downside. You can model this in Excel pretty readily. And you can then use almost like a toggle switch to be like, am I going to be net positive or net negative? And will my grow customers outpace my react customers?
Oh,
And
I'm using this framework. This is so good. And I do want to niche it down to the fitness and wellness space as those that
yeah,
are from that space are listening. This keep, grow, and react is crucial. And I keep talking about, especially in our industry that I just mentioned, fitness and wellness, it's the year of retention. And it's
yeah,
so crucial that you fit and you should have your members fit within one of those buckets. I think of the React one and I think of you just mentioned usage and frequency. Well, when
mhm,
that starts to drop, the likelihood that there's going to be some attrits in that bucket are high. And those are, outreach strategy, specific marketing campaigns or what
mhm,
have you, or just a significant improvement in real time experience. The grow piece, and I'm thinking share of wallet. Right. I think
yeah,
of, is it a different demographic? Is there more disposable income? How can we squeeze out a little bit more top line, right? And then the keep, I think of power users. Power users are your best brand ambassadors. I mean, they're the ones for
Mhm.
free going out there and promoting your brand. How do you keep them there, right? And that is great. I am taking that, Bill. That is so, so good. Where did that come from? Where did you learn that from? You know, it sounds like that's been just a successful framework. It sounds like it's
Mhm.
one of your go-tos.
That one for me came from one of my first startups
Okay.
where we were growing really rapidly. I mean, we went from 10 million to 20 million in ARR in less than a year, and great logos. All of our customers were on an ARR. They paid us upfront, good terms. They were Fortune, 1,000, so you always had to, worry a little bit about internal lag, but
Mhm.
for my customer success team, we were trying to figure out, honestly, like a staffing model.
Mm,
And how do I go ahead and load balance what I wanted my sales team to carry
right.
and the opportunity for that team? And for me, working with a really talented CS leader, she got it immediately.
Yeah,
And it was a way for her to go ahead and build remediation plans. Because, I mean, a lot of times you don't have that luxury until it gets too late.
exactly.
And being able to go ahead and look for usage data. There's so many great tools that are
Yeah,
out there now for usage. And from there, it was just a way to make sure that we were getting the 130s that we were looking for because our
sure.
product was basically built as a land and expand. So
Mm,
we wanted to make sure we got that second bounce. And
excellent.
oh, definitely from the fitness space. I mean, I totally see those grow customers as you need a personal trainer, you
Right.
need more classes, you need to, you
Cafe,
know,
spa, all of it. Yeah.
all the add-ons. And
Mm,
like you said, the React stuff, it's like it's all about swipes at that point. And you're
right.
like, what is I guess I'd love to see like on a monthly basis, like of my total members, how would you stratify them? And if you graph that, is that getting bigger? Is it getting smaller?
Right.
Are my inactives or my
Mm.
reacts like, is that now 30% and growing of my business?
You know what's
And
funny about you mentioned the inactive, speaking of the industry, notorious for not wanting to quote unquote awaken the beast. And
yep.
while it's on the we call it MBAL or membership balance, I do this quite often. I'll lift up the hood and say, cut that up. I want to know every single thing about your members.
Hmm.
And it's a head fake. It's like, wait a second, that's not your inbound because you have these inactive that have been inactive for who knows how long, yet you're not outreaching because you think there's a fear of you awaken them, they cancel, they attrit. Like,
Yep.
well, are they part of the inbound or not? Right. And so let's just figure it out and let's call it what it is. But to your point, that's when it's too late. So if you can be
Mhm.
proactive, preventative, and have some of the statistics and the data that you have to start tracking these things ahead of when it gets too far gone, right? They're just so inactive or
Mhm.
they're not engaged with the brand anymore. So the likelihood of keeping them sticky, it's tough.
Very tough. And, one of the other kind of key metrics that I will look at is what is my cohort analysis?
Hmm.
And, it works across really any industry and especially in that health and fitness space. So, like, imagine if you had your membership join month or join quarter, kind of like a vintage of wine. Who are
Hmm.
customers that joined in 2025 Q4? And then across the top, you've got, number of customers. And is that number getting bigger or smaller? So you can be like, oh my gosh, my customers from 3 years ago are still with me. They're still really
Oh, I
sticky
love that.
versus the other ones. So it's really just a simple two-sided matrix. And if you've got your MBAL, you can spin that so many different ways to start
Hmm.
to look at longevity and like kind of like burnout. So for the 100 customers or that you signed up in a given month, how sticky are they? And like then you can back into like churn reason codes. So there's a lot to be said from doing a really good cohort analysis. I
Yeah,
mean, you can
that's
even bump
amazing.
it up against, hey, here's when I tried to take price
Yeah, you're
and it
hitting
didn't
me.
work, or did I hit the wrong ICP?
Right. Right. Yeah, it's the other thing, right? I see a lot of posts, especially in January for the industry, and everyone's very excited about the
Boy,
acquisition, but there's so many different questions that I have, follow-up questions to it. How sticky are they? Are they your right ICP? What's their share of wallet? There's just so,
yep.
or did you discount to just acquire, but knowing, well, they're they're gonna only be around for a couple months. Is that really who you're trying to attract? So it's just there's so many different variables, but I love that you're looking at it in different angles, and the cohort analysis is huge. So again, thank you for sharing this. I'm learning a ton, and I know many listening and watching are learning too. And you've spent a lot of time with startups, right? That
Yep.
go to market, and you chatted about it here earlier around staffing models, but I even think of comp models, and you've
Oh, yeah.
actually posted about this where you really need to take these incentive plans, these comp models very seriously, especially when you're going to market or starting up,
Hmm.
because they can kill growth depending on how you structure them. And have you seen, experienced just some of those incentive mistakes that many founders make when they're starting up? They think it's the right approach or framework for the comp plan or incentive plan, and it just fell flat on its face.
Oh, yes. Yes. And that at times can be the third rail, but
Mhm,
if you don't have a good comp plan, you're going to you're into a very vicious washing machine effect of
mhm,
every dollar of revenue is going to get sucked right back up into sales comp. And the only people that are going to get paid on your team is your sales team.
mhm,
And you're not going to be able to invest in yourself as a founder, your marketing team, your technology team, that next leg. And that's why, like, I always preach about the importance of the relationship between your quota and what your fully loaded earnings are, your base plus your variable.
right.
Because if you don't have that right ratio, your sales team will never pay for themselves. And I was in an organization, and like you said, there were so many of the things that you just mentioned. We were discounting heavily. We were doing short term agreements, and that customer needed to renew 3 to 4 times just to earn back our
Mhm,
acquisition cost because of the fact that we sold them on a 3 month plan when I didn't really make any money until my 1 year plans kicked in.
mhm.
And I told this to a sales leader, and thank goodness we were on the phone. He practically, jumped over the table at me when I told him his team wasn't earning their keep. And he's like, "How can you say that?" I'm like, "Just look at the numbers." I'm like, "If you are going to go ahead and put this low degree of hurdle out there, that's what you're going to get." And it came down to targeting, it came down to price point. So, quick rule of thumb for me is if I were to pay you $200,000 as a sales leader, 100 base and 100 variable, my minimum quota for you is 5x. It's a $1 million quota. And the reason that that number works out very logically is if you take 100,000 in variable divided by your million, boom, you get a 10% quota, or I'm sorry, 10% commission. That's the number that everyone can get their head around. But you take that 200,000, divide that by the million, you get 20 cents on the dollar. That means for every incremental dollar of business that I bring in, 20 cents goes to sales.
See,
I'm now an opportunity maximizer on 80 cents of every dollar. Like, just knowing that in your head is
love
like
that.
how you can cash flow your business
Yeah.
appropriately.
And it's just architecting the right way so
Mhm.
that one, it's win-win all the way around. And that's a great spot to be when you're looking to grow, when you're just getting into the marketplace, right? And that's the thing too. And I was curious about this because, should it be from your experience, and maybe it's not one or the other, maybe it just depends, but from a incentive plan, should it be tied to revenue growth and acquisition growth, or have you found it better to actually be tied to the bottom line? And I'm always
Mhm.
wondering about that because does that stall growth in a sense if you're just tying things to profitability? I'm curious about that.
That's such a conundrum that a lot of companies have run
Mhm.
into because salespeople can't control the expenses that are outside of their purview and outside of their reach. So if you tied it to profitability, you could have an upside down expense model and you could be spending, way too much money on travel or, in
Right.
office meals. So from a salesperson's perspective, incenting them based on what their universe is of things that they can control
Hmm.
is the cleanest.
Right.
If you actually can get down to really pure unit economics, like, you're buying, we'll take something simple, like you're buying gasoline. Like, you can see the price of gasoline wholesale and it's 70 cents.
Hmm.
And the retail price is $1. That gives you 25 cents per gallon to incent a salesperson. And, that's very linear, and you can then incent them on maybe gallons moved. But the if you're talking about like a membership or a piece of software, there's so many more moving facets
Yeah.
within the organization that it can get really confusing and overwhelming. Like, honestly, the most important thing when working with sales teams is give them a comp plan that's
Keep it
plain English
simple.
that they can tell, you know,
Yeah,
no
I've learned
Easter
that
eggs.
too.
Yeah. I've written many a comp plan document. You don't want it to be like an Easter egg hunt. You don't want to have to like look on page 1 for this and then page 2 for how the unlock happens.
Yeah.
And then, you know, any degree of ambiguity will come back and just
Oh,
absolutely ruin your
it
morale, your
does every time.
credibility. And because salespeople know that sometimes if they oversell, they actually get a higher quota that is unattainable. And that's
Mhm.
essentially they're set up for failure.
Right.
And even setting quota is so important. Just because you had a monster year doesn't mean you can do that much and more the subsequent years. Maybe you got a bluebird. Maybe you got, a customer that was in a fast movement or emotion that allowed you to take advantage
Yeah.
of that. You have to kind of look at it from where the market is. And, even think about it from like a capital equipment sale. Like, say you're selling um, CAT scan machines to hospitals. They're not going to buy a machine from you every year. So you need to have a customer Rolodex of like every 5 years. And how do you go ahead and keep those people warm? So it's a very different mindset
Yeah.
of how to sell and where to sell.
That's so good. There's a lot of conversation. I'm sure you hear this all the time around the word uncertainty
Mhm.
in the economy. Some are even arguing it's just we're bound for the correction. We're bound, and actually the other thing is this AI bubble, which I don't know. I think people are just selling off because that's typically what you see at the end of Q4, right? But who knows? Maybe there is. Maybe something is a brewing, or maybe there is some type of correction. What I wanted to talk about, though, just from your experience, is how can a CFO, how can a finance leader protect against the downside, right? So maybe it is coming. So then
Mhm.
be prepared, prepare your organization. What would you recommend that a finance leader does to protect against downside?
At the very least, you need 3 different finance plans. You need a best case, you need a mid case, and you
Hmm.
need that worst case.
Yeah.
And you have to be ready to go ahead and run that sensitivity analysis. And if you are facing uncertainty, whether it be economic, whether it be regulatory, or even, your product isn't the darling product anymore.
Hmm.
Maybe you were now competing against an AI tool or a strong competitor comes into the place. It's like, if you put the chips on the table and start saying that my recurring revenue or my revenue in general comes down 20%. What does this do to the business? How does this shorten the runway of
Yeah.
cash?
Yeah.
What are the levers that I can pull to then start to um, create opportunity within the org? Because if you think about it, most income statements, 70-ish% of your cost is going to be tied up in people.
Right.
And then you're going to see things like maybe rent, which is something you can't turn on, turn off. Even like your software, like, your Slacks, your um, Microsofts, your Googles, those are on annual contracts. So once you start pulling those levers out, there's probably only a few real dollars that you can turn off in a meaningful way. So it's like, now you have to start thinking about like, okay, what's my people stack and what hard
Again.
decisions do I have to make at that point? But the only way to think about uncertainty is to be ready to be prepared to meet that challenge
Yeah.
and drive through it. And
Excellent.
we've all seen it. The worst thing that an organization can do is make no decision. No decision is the worst decision. At
Total.
least try something and be wrong.
Absolutely. Yeah, and I'm a part of the CFO Alliance group and the CFO Leadership Council, and I was at a table here recently, and some of the chatter was around uncertainty or even expense freeze. A lot of that coming into payroll. I was really surprised by it, and I had asked, what are y'all facing? Is it a tariff situation? Like, no, we just don't know. We don't know what we don't know, so we're holding things. And I saw a post that you did, and I think you might have mentioned it in a LinkedIn Live too. But one of the better questions to ask when you're thinking about capital allocation and spend is, what does it cost us not to? And I'm like, wow, I've never thought about it that way. I'm just so
Mhm.
tied to the outflow, right? Just the actual dollar of outflow and cash. But the way you reframed it is, but wait a second, if we don't do it, what does that cost us? Right. So your
Yep.
classic opportunity cost scenario. Can you kind of explain that to those? I mean, we have finance leaders, but also business owners as they're getting
Mhm.
educated on this in opportunity cost. Can you walk us through just your thoughts around that whole piece?
Oh, gosh. So as the business continues to ebb and flow, you're really faced with a series of questions about how do I grow? How do I expand? You can start to look at great classic books like Blue Ocean Strategy and how do I go ahead and create market adjacency and be able to expand into that. And as your business is working through, say, a pivot, you have to be ready to go ahead and find ways to optimize to be able to go ahead and strengthen your position. Like, say you're in um, a service company and you deliver and you repair devices like high end medical lasers, for example. Well, what if you bought the company that supplies you the parts? You've just now created a vertical. You've just now increased your margin
Right.
exponentially. How can you do a smart tuck in acquisition to be able to go ahead and reduce market cost, but also increase share of wallet
Hmm.
or offer a new adjacent product to allow you to get into a new space. And that's really where a lot of founders sometimes, I feel like they're just staring at a wall. It's like you have to kind of pull back and like find like that perspective. And,
Yeah.
a lot of inspiration for me comes from like being out like on a run or like hiking or just something like because that's where like your brain just it's not here, it's much more expansive.
Right.
And that's where I think sometimes business owners get really hung up.
Yeah.
And it's all about perspective and how do you go ahead and change that perspective. Like, I'll say that one of my first startups, we had probably I felt like we had like 30 people on the sales team. We had a defense team, we had a consumer goods team, we had a regulated industries team, and we were doing well, but not great. And it wasn't until we really honed in on our ICP in a regulated space, working with medical device manufacturers and the FDA, that we were able to go ahead and find our ultimate fast lane to be able to get there. And it's being able to go ahead and, take stock of where does your revenue come from? Who are your customers? Are you hitting a true ICP? Do you need to
Mhm.
reframe your ICP? So
Yeah.
these are all of the things that, finding a good strategic partner, a good thought partner, both from a finance side, from an operational side, is so important.
Yeah. I'm actually starting to hear this FinOps term, right? It's like FinOps is actually starting to blend a little bit and you mentioned it like your finance business partner. There's a lot of
Yeah,
operations that go into that too, which I really appreciate. Well, I have one more question for you. I want
sure.
to be respectful of your time. AI, where do you think this is going? Actually, I have two questions. It's kind of a two-parter. Where do you think AI is going with finance? What are you excited about? Anything that you're concerned about? And then finally, private equity. You spent a lot of time in private equity. What are you excited about for 2026 in the private equity world?
Okay. So, first part for AI, I think there are some amazing technologies coming out every day. I mean, just think about how quickly Chat GPT became part of our lexicon. Like faster than the word Google, I think became part
Oh,
of
definitely.
our lexicon.
Right.
And I think being able to use it thoughtfully is really the most important thing. Like learning how to write a good prompt, like
Mhm.
getting a prompt engineer or learning how to go ahead and use it as a thought partner. Because if you're not using it the right way, you can ask it the same question 2 or 3 times and you'll get 3 different answers. So
So
you
true.
really have to be super thoughtful about how you want to go ahead and set that up. At the same time, and I have the utmost respect for the folks down in the Bay Area at A16Z. They've put a
Yes.
lot of money into that space.
Yeah.
They're not all going to be winners. So
Right.
by definition, you are going to have a bubble,
Mm.
and you are going to see that money not necessarily return at an exponential level because we're still looking for a standard. We're still looking for what is, the true AGI, what is the
Right.
true returns that we're looking at.
That's exactly the
And
ROI. Yeah.
so there's some good work being done in the finance space. I think from some of my early days, like I had a hard time just getting chat gpt to do like a basic math problem.
Right.
And and you look at even from like an excel formula, like I had it in my head and I put it in chat gpt and I'm like, that's not it. But
Right.
it's like y- but it's a you have to continue to work it, and it will get better. There's some really good thought leaders on LinkedIn who write about how to use
Yeah.
chat gpt appropriately and how to get results out of it. Even basic things like if you download a balance sheet, for example, or an income statement, it always comes out as a wide table. So you've got, all your accounts on the left, months across the top. In order for it to be super useful, if you want to be a bit of a data nerd, it's better as a long table.
Mhm.
But like even just asking Chat GPT to convert from
Right.
wide to long,
Right.
like that just saved you 20 minutes worth of headache,
Absolutely.
and you can be off to the races.
Yeah.
And your question about PE, I'm really excited for PE because if you think back, probably about 4 or 5 years ago, um, interest rates were really cheap. A lot of money being pushed into venture capital. You had folks like Tiger Global writing $100 million checks on a very regular basis. A lot of those funds that have a 5 to 7 year life are starting to come due.
Right.
And I think the guys in private equity are just going to be really opportunistic and start taking advantage of overpriced assets or mispriced assets and doing a lot of really good strategic combinations.
Yeah.
I mean, look at the guys at Thoma Brava, for example. They've been rolling up security companies
Yeah.
left and right, and they're going to piece together 2 or 3 of them and just roll out the next top level security company.
Right.
So for
Yeah.
me, I'm excited about where that space is, because the inverse of that is if you raised money, say even, just before COVID or just like after COVID, like you're probably a zombie company because you haven't been able to go ahead and live up to the expectation
Yeah.
that was put on that company from a valuation multiple. The only way to get on the other side of that is to take a massive down round.
Yeah.
And
Yeah, and
that
I think
hurt.
that's yeah, I think we'll see that. It's definitely 26, 27, and 28. And what I'm chatting with business owners, especially in the fitness and health space, because we're seeing a lot of private equity. We're gonna see a massive wave, which is why I think everyone needs to get their unit economics down, right? So that, for instance,
Mhm.
there's many like you and I, Bill. I mean, we're looking for any which way to find that discount. I want a better price. And if the books aren't good and if the unit economics aren't there, and if you haven't been thinking about all the things that Bill did, rewind this to all of the things that Bill just laid out on infrastructure. If you haven't been doing that proactively, you're going to get your Q of E, you're going to get your due diligence, and there is going to be a haircut to what you thought your price was. And that's the reality. But I am
Mhm.
excited about the wave of private equity in the wellness and fitness space. I think there's a lot of opportunity there for sure.
Oh, definitely. I mean, there's some really great tools that have come out. I
Mhm.
mean, like tonal or the
Yes.
interactive stuff, I think is really
Yeah.
exciting. There's a really good private equity analyst that I've been talking to a lot, and he focuses on health and
Mhm.
wellness, and he sees that market just exploding
Right.
in the PE space for 2026
Yeah.
as medical device gets much more
Wearables.
honed
Mhm.
and I think there's even some underrepresented markets. Like, here's one of my predictions. Um, Hearing and audiology is
Mm,
going to be one of the next hot spaces in the wellness
yeah.
community. I don't know if you saw that recent article that came out that talked about the high degree correlation of dementia to hearing loss.
Really? No, I didn't see that. Interesting.
And so as more and more people are beginning to experience that, the sooner you can get in front of people losing their hearing, the better. But, look at your corporate wellness plan. You've got medical, dental, and vision, but you don't necessarily get a hearing test
Mhm.
on the regular to be able to
Right.
go ahead and figure out, are you susceptible to hearing loss? But that's my hot take for the last question.
That's so good. Well, thank you for that. That's exciting. This has been super sharp. For those that want to connect with you, Bill, or follow your work, I want to take a look at your content and learn more about what you were chatting around. Helping fixing financial infrastructure and the operating cadence. How can they reach out to you? How can they learn more about you?
I would say the best place to start would be LinkedIn. Definitely follow me for content I write most every day. I have a newsletter that comes out every Tuesday, um, and I've been working on a series called um, "Operators from the Front Line," and these
Oh,
are
I love that.
stories that I've lived where I will talk about what it takes to go ahead and do a financing round or how you overcome
Okay.
something that it's almost like a little mini case study.
Yes.
Um, and then also, you can also follow me on my company page, which is Equity Spring Partners.
That's right. Equity Spring Partners. I love it. We'll make sure we put it in the show notes as well. Well, Bill, this has been a pleasure. I learned a ton, and I know those listening and watching have as well. And as I mentioned, please go back, y'all, and review some of the best practices and the cadences and the sequences and the systems that Bill laid out, including that framework. That was huge. I'm gonna have to steal that, so I'm taking it with me.
It's all
But I'll
yours.
give you all the kudos. Like I learned this. Where'd you learn that from? From Bill Dillmeyer. I love it. Well, thank you, sir. Again, this has been another episode of the Owner Seat podcast. And as I've mentioned in previous episodes, all episodes release every Monday now and Friday at 8 a.m. Central. I'm your host, Albert Ramos. Bill, thank you so much. I'm so lucky to have you on. Such a pleasure.
My pleasure. Really enjoyed our time together.
So did I. Thanks, everybody. See you soon.